far better for the broader universe, just about flitting between the green and the red. The banks are under pressure, FMCG, consumption, real estate, metals too, putting the brakes on their rally. PSE as well as energy and IT to a certain extent, well, not doing too badly in trade. Let's run you through then some of the top losers in today's trading session. The HDFC Twins, ICICI Bank, HUL, Tata Motors, M&M Finance, Kotak as well as JSW Steel, SBI, not to mention Reliance Industries a little bit quiet. Divi's Labs, ONGC, Coal India, they're active in trade. To some of the newsmakers then, Reliance Industries and investors are clearly gearing up for this one. The retail chemicals business could drive the performance in Q4. And there's also IndusInd Bank that we're eyeing as it could clock in a strong profit growth, but provisions could remain elevated. Meantime, Wipro is active in trade after it revised its IT services revenue guidance for Q1 FY22, expecting an 8 to 10% sequential growth in revenue, and that has lifted sentiment. In fact, you've also got Titan in focus. The jewelry business has definitely lent some glimmer in the Q4, but shares are a bit dull. Profits have met street estimates. CLSA has a sell rating saying that it's expensive valuations. Auto stocks in focus. The second wave and the localized curbs could hit the brakes, put the brakes on Motown, as the monthly auto sales volumes could run into rough roads. And watch out for Marico as it came out with its numbers with profits at 227 crores versus 199 crore rupees. The EBITDA at 319 crores with revenues growing to 2012 crore rupees, and margins though came in lower, 15.8% versus 18.8% on year. Well, those are some of the newsmakers in trade. Let's connect then with our chartists as well as guests. We've got Rajesh Palviya as well as Naresh Mirani joining in on the show. Good afternoon, gentlemen, and Naresh, going to come to you first up. Banks clearly weighing down on the index today as we're looking at 14,700. Did you anticipate this move?
Choppy period for the markets wherein we have been trying to go above the 15,000 mark, and now we are again back to testing the recent breakout points of around 14,700. So for now, we'll be looking out for how do we sustain around the 14,700 mark. Only a move below 14,450 is where we get bearish. So for now, closer to that 14,700 mark, expecting some bit of a support coming in at current zones. Similarly, on the Bank Nifty, around 32,200, 32,300 would be a zone where we will be watching out for buying support. So overall, what we see is there was a quick bounce back wherein the Bank Nifty went from almost 30,500, 31,000 to closer to 34,200, 300. So a reflection back, testing the last 3-day lows closer to 32,000, 32,200 would be a good entry point for the short term with the stop loss below 31,900.
All right, Rajesh, let's get in your view as to how you're looking at the Nifty Bank Index. After seeing some amount of reprieve, it's come back under pressure. Do you believe that we're likely to see a little bit more downside? Is the undertone looking a little bit bearish for the Nifty Bank Index?
Yeah, good afternoon. Yeah, if you look at the overall setup for the Bank Nifty managed to cross 33,000 level, but again, if you look at the rollover data for the May series, it was below last month rollover data. So rollover data is also showing that we are very light in terms of position for the Bank Nifty, and the kind of selling pressure which we have seen in the today's session, that it is showing that we may go further down towards 32,500, even 32,000. That could be the next support area for the Bank Nifty. If we breaks below 32,000 level, then more unwinding pressure we can see in the banking as well as in the financial stocks. So as of now, the lower support for the Bank Nifty is around 32,000. If we hold that level, then some sort of bounce back action we can see in the Bank Nifty from that level. But until unless will not crosses about 33,500 level, the pressure is likely to remain in the banking stocks. So at the current juncture, for near-term trade for next 5 to 6 trading session, which we are expecting that some pressure would be there on the banking stocks on the higher side. So sell on rise should be the strategy in the banking as well as in the financial stocks, till Bank Nifty not able to comfortably close about 33,500. So So we will adopt a sell on rise strategy in the banking and financial stocks.
All right, Naresh, where would you be comfortable buying into some of the large cap private names? Would you wait for a further dip before entering the HDFC Twins or ICICI Bank, Axis, etc.?
The one which I like is ICICI Bank closer to the 600 mark where it has come today, and would keep a stop loss at 585. So out of all the banks, find the strongest one on the short-term charts as well as on the longer-term charts to be ICICI Bank. So if you look at ICICI Bank, what we expect is going forward, the last time the recent breakout happened about 595, 600, we are testing that levels. So for a period of between March mid to April, we had a resistance around 595, 600. We just crossed it on the result date and we are now testing those same lows. So we'll keep the low around, stop loss around 585, which is the gap also as well as the low on the result reaction. So closer to 600 would be a buy with a stop loss at 585. So would focus only on ICICI Bank in the whole banking space.
All right, let's get a move on then and focus in on the Jefferies view, which states that India remains grim with the world's media waking up to its story. Let's find out what exactly the Greed and Fear report states about the Indian economy as well as the FII flows and the Nifty valuations. Pankaj is here to walk us through that. Pankaj?
Well, let's talk about the latest Greed and Fear Christopher Wood report, which is coming in from Jefferies. It's a weekly newsletter which people, genuinely, before taking big calls, tend to await for. So what he's saying is, particularly talking about India, that India remains in the grim situation with media waking up to the second COVID resurgence story. More with the coverage tinged than preferably anti-Modi basis is what they can see. Greed and Fear earlier had reduced its overweight rating on the fear of increasing cases, but in the short term they believe that they should have actually removed all of the exposure to India. Net foreign buying into equities in this month has reduced and exposure to China has been added. Nifty now trades at 20 times versus 10-year average of 16 times. Second, what they also say is that there will be moments of panic in this second wave, as well as there will be, national lockdown or, the news around national lockdown, local lockdowns and the sort of impact that they have. Stock market is, potentially in India is vulnerable to absence of any concrete evidence that, this yield curve is peaking off at this point of time. Overall, would have advised investors to reduce overweight much more than what one would have expected. Resurgence of COVID cases does pose a risk as far as the whole economic recovery is concerned. What does the government do? What does the state government do? Is something which will be tracked by investor community quite closely.
Thanks very much, Pankaj, for giving us those details. So turning quite cautious on the overall outlook for the markets as well as valuations. Well, let's also hear it out from Ramdev Agarwal of Motilal Oswal Financial Services. He discussed his view on market trends, earnings, and what the impact is of the second wave.
So it's a very challenging year because this COVID-2 second wave, then probably even third wave. And so there are a lot of things which are happening on the ground, which are keeping the consumers in the house or mobility restricted. So it is extremely difficult to predict what is going to be the business outcome in specific business. And one good thing for the global economy is that US, UK, China, these countries have come out of COVID. At least they're declaring that they have broadly come out of the COVID, and since they have a massive pool of savings with them, they are going better in terms of consumption. All the pent-up demand is coming up. You might have seen today Facebook and Google and all those results. They are up by 50, 60, 70%. It's unprecedented. So that particular kind of demand, consumer getting unleashed, is, since they are import-dependent economy, the imports will come from China, India, and the rest of the world. So I would think that there will be business momentum led by America and China, because what you import from China, if China doesn't have, China also has to import. So I think there will be aggregate demand in the global economy will be high, and that will determine a lot of businesses what they do. And it will be extremely selective. It is very tough to figure out who is benefited, who is getting hurt. So I think it's very unusual kind of a situation. I mean, some pockets are so good that you cannot believe they never had it so good, and some pockets are so bad that they never anticipated this is going to happen. So it's a mixed kind of a scene.
And do you believe that the financials will remain fairly vulnerable to this, and that when one looks at the financial basket, that you would now only stick to some of the large cap top tier names within this space, the ICICI banks and HDFC banks of the world? What's the outlook?
Stick. I mean, I can tell you only what I do, what I'll do, what is going on in my mind. You know, the ones which have been able to weather last 12 months well. I mean, of course, everybody is impacted. Whether bad, ugly, small, big, everybody is impacted. But the one who is able to weather this last 12 months well, they are the ones. They are the ones going to get on. Right now, this is not the time to speculate on what is going to be the outcome of COVID, second wave or third wave or fourth wave, because this beast is completely unpredictable. I mean, the risk is whatever one is pricing. I can tell you. I mean, people don't know what are the risks ahead. And risk is the one which you don't know. So I think we are in slightly uncharted environment. This problem is not contained. So I would be sticking to a little safer kind of counters rather than being speculative. Because the ones which are small or not so good, they have a speculative gains possible if the economy settles down. But to believe that economy settle down in next 12 to 24 months, that could be premature right now.
Okay. All right, time for a quick break right here on the show. Stay with us as we connect with our fundamental experts. With news, we're 200 points down on the Nifty. We'll take a break, be right back with more. Somber for the equity markets on the first day of the new series, but perhaps the kind of exhilaration that we've seen in the equity markets, it's inevitable that now you're seeing a little bit of profit booking kicking in. Let's find out a little bit more. Mihir Vora is joining in from Max Life Insurance as well to share with us his outlook on the markets. Mihir, good afternoon. And given the fact that we've cooled our heels for the equity markets after seeing some relentless buying and moves on the upside, what are you making of the texture of the market? And do you believe that we can see this fall further sold into, or do you believe that it's just a little bit of consolidation along the way?
Hi, good afternoon. It is a bit of a conundrum in the sense you have all this negativity around, but we also have the learning experience from last year where we saw that bad news tends to be factored in quite fast. So while the current situation is a little bit worse than last year in terms of number of cases, but the unknowns are lesser. We know that there is a vaccine around the corner. We know that rollout will happen in the next few months, and the pain that we are seeing right now is finite. Last year we didn't have an idea of how long this crisis would last, but now we definitely have a horizon by which we can see the end of this crisis. So the fact that things are currently bad, but there is a finite horizon beyond which we have hope, will keep the markets on its toes. You'll have the bouts of volatility, hope, and fear will continue to kind of drive the market. The big factor again, which remains a common positive versus last time, is that global liquidity conditions continue to be very benign. The US Fed, the ECB, etc., will continue to pump liquidity for the foreseeable future. So the global tailwinds, I think, will continue to give support to the markets. And in the meantime, we might have these corrections by the time we see through the vaccinations, etc.
Mihir, what are you working with when it comes to expectations for IndusInd Bank? We're working with fairly healthy numbers this time around, but the expectation is that provisions as well could remain a little bit elevated. What is it that you're expecting from IndusInd in the Q4?
I'm sorry, I won't be able to comment on individual stocks.
यार मेरे को पता नहीं है कौन
Okay, fair enough. So, want to ask you about IndusInd Bank in particular, but how have you read into the kind of earnings that we've seen within the financial space so far? What is it that you made of the commentary with respect to the impact of the COVID on, NPAs for some of the private sector heavyweights? And what is it that you would like to see going forward when it comes to the Q4 earnings within the financial sector?
Sure. So the big results that have come out so far are mostly from the private sector financials, banks as well as NBFCs. And the good thing is that so far the results have been, good as per expectations or even little better than expectations as far as the NPA trends and the recovery trends are concerned. So the first set of results now that we are almost into the third, fourth week of the month have been good. And that's the reason why you did see a good pullback in financials after the underperformance that we saw from mid-February. So I think the banks with a granular retail portfolio are holding up quite well. Asset quality is holding up quite well. Even in the NBFCs and certain consumer-oriented NBFCs or even some level of microfinance, the granular part, the retail part is holding up quite well. So to that extent, it's relatively been good news, I would say, in the financials, both banks as well as NBFCs.
Looking at the texture of the market, today while we're down a good 1.5%, it's really been one of those weak days after yesterday's drop from that 15K peak. 14,728 is where we're currently at for the Nifty futures. Having said that, there are gains for an ONGC that's holding up nearly 5%, although it spurred a good 7% earlier in today's trading session, has come off with the rest of the market. There's Divi's, there's LT Technologies, Apollo Tyres, Concord. These are names which are actually holding out. Maybe just wanted to get your sense, given that ONGC, Concord are both holding up. PSUs were the darling of the market, say, about a quarter back. And then, with now especially the second wave of the virus, one is seen again sort of stalling off the disinvestment process. Wanted to understand where you stand on the PSU theme as an investment.
To like the privatization theme, we do believe that it will unlock value in the candidates which are up for privatization. But delays are inevitable. If it was not COVID, it could have happened because of other reasons. But the valuations that some of these companies trade at are quite compelling for any private sector entity, because not only will they get control over a very high quality asset in most of these cases, some of them are near monopolies, so to say, or at least large players in their respective fields. And these physical assets which have been built over the last 30, 40, 50 years are very difficult to replicate across sectors, real estate, local approvals. So, I'm sure any private sector would not mind paying a premium for some of these prime assets. So we continue to remain positive on the privatization theme.
Sure. Also, we wanted to understand, start of the pandemic last year, you had the entire rural recovery theme besides IT and pharma, which the markets went after, and the pent-up demand as the theme. So everything from farm equipment to the auto ancillaries, tires, battery makers, they were the first ones to actually see a revival. Do you sense that that's going to be the clear case right now as well? Because we're already seeing a tilt towards IT pharma yet again. Themes will pan out because it's a logical thing to buy pharma when things are looking bad on the epidemic front. So those sector rotations will continue, and I do believe, of course, pharma itself is a secular story like the chemicals, where India has very strong core manufacturing strengths. That will continue for quite some time. My guess is that the government will have to come out with another kind of package for the rural economy. Given that now this time around we are seeing the spread of the virus even to the rural areas, so there will be some kind of a package due at some point in time, because this time around the number of cases etc. are not only localized to the large urban centers, but we do see a trend where even smaller towns are getting impacted quite a lot. So my guess is that normally the rural economy, and we expect a good monsoon, should do well. And if at all there is weakness, the government will come out for some support to this. So that should continue to do well. The key to watch is how the urban consumer holds out, given that
In the second round, again, there might be some questions about jobs, purchasing power. People are spending so much on health with so many number of cases. So whether there is a dent on purchasing power and income levels and savings and the urban centers is something that we'll have to closely monitor over the next few months.
Yeah, indeed. Naresh, wanted to get your sense in on some of these PSU charts, ONGC, Concor, big breakouts here. What's happening?
So today is the first day where the price action has changed in terms of relative outperformance to the index. So that is where it's an indication that some of these names could surprise over the next few weeks. So if you were to look at a lot of these names, so whether it's a Bharat Petroleum, BPCL, all these names were very range bound for the last almost 2 to 3 weeks. So even when the markets corrected, after the correction also, they've been very stable around these prices. So for example, BPCL has been in the range of 405 to 425. Started making a move today towards 435 and has come back to 425. But looks interesting as in the way we've started seeing a recovery trade on a day when the Nifty is down 200 points. Now, the last time we started seeing a similar trend change in a lot of PSUs was in November, wherein even when the markets were sluggish, PSU started taking a uptick and it continued to follow on. So the best way to trade right now is to have a very small stop loss. So for example, if I have to take a trade on Bharat Petroleum out here, I have a stop loss for the last 5 days range at 415, and that's a 2-3% stop loss, and the upside could be surprising if the trend starts. Same is the case if I pick up a Hindustan Petroleum or a GAIL or a Coal India. Hindustan Petroleum, for example, has been in the range of 225, 235, 240 for the last almost 1 month. And today it tried making a move about 240 levels. So at this prices, a stop loss at 225, 228, and an upside towards 255, 260 to start with, and could be higher also. So the whole PSU pack generally over the period of time used to be wherein even if the Nifty is going up, they would fall. And that has changed over the last 6 months, specifically ever since November. So we are again back into a time-wise consolidation, which happened in a lot of PSU names. So a lot of these PSU stocks went up 50-100% in a period from November to January, February. Now they are in a sideways consolidation. Today is the first check we are seeing across the whole PSU basket. So the view is take a long on PSU basket, keep a stop loss at the 5-day low, and keep adding if they cross further highs in the near term.
Rajesh, on the other topic that I was just chatting with Mihir about, the entire rural recovery theme, your Dabur, Marico, or for that matter, even some of the farm equipment majors like in Escorts, M&M, where is it that you're seeing strength sectorally, if at all?
So if you look at the overall theme here, so FMCG looks to be a little, promising here, because if you look at the last 2-3 month kind of charts of all the FMCG stocks, most of the stocks were in consolidation mode, and some of the stocks have shown some of the recovery action again in the prices. So from that sector, I like Marico is looking very promising. If you look at the overall setup since last 2-3 months, stock was in consolidation zone, and looking at the rollover data, we feel that now stock can move further higher from the current level. The kind of buying action which we have seen in the today's session also, it is showing that now stock is heading towards 430, 435 zone, and once we able to make this breakout above 435, then possibly we can see a target of around 460, 470 in the short to medium term basis. So Marico is looking promising from the current level. One can keep a stop loss of 403 to go long in the stock, hold for some period, and we believe that stock can move further higher towards 460, 470 zone.
Mihir, what's the outlook on commercial real estate, given the fact that now we've of course become accustomed to work from home with these curfews and lockdowns being extended across various cities and states? Do you think it's going to impact the overall demand for commercial real estate and outlook, or do you think that in the long run things will look steady and pick up? And what's the view even on residential?
So overall, the commercial real estate segment relatively is much better placed compared to the residential. the oversupply in the residential segment, especially in some of the regions like NCR and Mumbai, is still quite a lot. So relatively, commercial is the preferred segment. Within commercial, I think the trend will be towards the best quality buildings. Grade A commercial property will continue to command a premium. We don't expect rentals to move up that much in the next 1 or 2 years because of the little bit of reduced demand. So in our estimates, we've cut overall commercial demand by about 10 to 12% for this year, given the second wave. So that's what it looks like currently. But grade A commercial property, which is occupied, should continue to command premiums. And we do see that the global companies as well as the startups and the good PE funded tech companies are continuing to hire. So I think there is no problem on the grade A commercial property. And if you look at the other representation of real estate in the markets, which is the REITs, most of the REITs have good quality portfolios. So I think they should also continue to perform in line with expectations and continue to deliver the yields that they are expected to give.
Okay, let's get in a view on the charts as well. And Rajesh, what's the outlook when it comes to the real estate pocket? Which is the stock that you believe is a good buy at the current levels that has strong long-term prospects?
So if you look at from real estate front, so Godrej property looks to be promising. If we look at the setup for the Godrej property, stock was in downtrend since last 1.5 months, but now stock is in process to form a base building, and the stock has made a low of around 1250 zone. But the kind of action which we have seen since last 10-15 trading session, it is giving a signal of base building formation. And now if stock managed to cross above 1400 level, then a possible upside we can witness towards 1500 to 1540 in the short to medium term basis. So one can buy in the dips also with stop loss of 1320. On the breakout of 1400, one can add aggressively towards the target of 1500, 1540 on the high side.
Okay, gentlemen, stay with us. Lots more to talk about. But today evening, all eyes on Reliance Industries. Of course, that's something that the market is only going to digest come Monday morning. It's a more muted quarter that we're expecting this time around, with retail also getting hit because of the localized lockdowns, curbs and curfews put in place. It's actually the O2C chemical business which is likely to deliver higher for them this quarter. In fact, I'm going to take it across to my colleague Ajay Sharma and get in more details on what to expect from Reliance this evening.
Well, Reliance Industries this quarter should deliver a very strong set of numbers, mainly because of the chemical or O2C business which has rebound. Well, if you see the breakup between that, refining has actually improved just a bit, but it's the petchem end of the business which has really rebound very sharply and will give the big boost to the quarterly numbers this quarter. If we talk of the consumer businesses, retail also has come back because the Q4 actually did see normalcy return before the second wave actually hit the country. A large part of the stores were operating online as well. So there's also a big boost coming in. So these two will be the big drivers of the numbers this quarter. If you talk of Geo platforms, though the subscription addition was healthy, the ARPUs are coming under a bit of a pressure, and there is generally a little bit of sluggishness as far as the Geo business is concerned, which may a bit weigh on the numbers. Also, what will be aiding the profitability is the lower tax rate. So that is something to watch out for. If you look at the stock price, the stock has gained good 5% going into the numbers. So that's something to watch out for, as the street is already kind of pricing in a good performance. There are a lot of big reports coming in. Jefferies, Morgan Stanley saying the stock price would actually rise very sharply because the fresh earning cycle will start this quarter onwards. That's something to watch out for. News flow also is very hectic. Financial Times saying that there is a share swap kind of arrangement which could be working for Aramco deal. Aramco deal clearly will be the big focus area. The street would want to know from the management what is the status, and also whether any color on this share swap arrangement, which some reports are emerging, seem to be suggesting between Aramco and Reliance, is working or not. What's the trajectory as far as how long can refining margin remains subdued. All these are the factors which the street is watching out for in quarterly numbers this time around.
Okay, let me also take it across to Poonam, find out what to expect from IndusInd Bank.
Well, it's likely to be a good quarter in terms of the profitability. Expect IndusInd Bank to report profits of 840 crore. It's a huge rise of nearly around 170% on a lower base. In fact, we should also be expecting stable margins at nearly around 4 to 4.1%. NII growth is seen at 7.4%. However, provisions are likely to remain elevated, as well as the overall slippages may also still remain elevated. Management commentary, especially in terms of the impact the COVID second wave on both the MFI portfolio as well as the commercial vehicle portfolio, would be very important, because yes, there are reports and industry players do suggest that there is stress, at least in the MFI segment. Again, in terms of the loan growth, it's likely to be modest. Sub 10% loan growth is expected. Deposit growth has been fairly strong at 27% YOY, and which is a fairly which is a good sign of comfort, as it does shows the ability of the bank to continue with higher deposit mobilization. Again, commentary in terms of the overall asset quality trends would be important, along with the impact on growth on account of the COVID second wave. If you look at the stock is trading at nearly around 1.3x FY23 price to book, and it has underperformed Nifty Bank in the entire 2021. It is just up 2.7% on a YTD basis.
Thanks very much for filling us in with all of those details. Well, let's get a move on then and understand from you, Mihir, as to what the outlook is when it comes to the entire PSU space. Do you believe that there is merit in picking up some of these stocks within the PSU space? It could be the PSU Bank, some of the OMCs. What's your outlook in the long run?
So as we discussed, as far as the privatization candidates are concerned, I think it's a good bet. Across sectors, the candidates that are up for privatization do make sense for a strategic buyer. So that part of the PSU space is something that we are positive on. Defense is another area where we have a good structural view, long-term positives. I think this theme and attempt to become Atmanirbhar, bring in more defense manufacturing along with technology transfer and strategic tie-ups will lead to a lot of PSUs getting onto the bandwagon apart from the private sector. So that within PSUs, you also have the defense pack, which can give good strategic returns over the next few years. PSU banks, I think, apart from the top one or two, there is not much to choose from. Not very high level of confidence in the asset quality in the mid-size PSU banks. So that is something that we would continue to kind of avoid or be underweight on. And in the metals pack, again, it's more of tactical calls. There are quite a few PSUs in the ferrous and non-ferrous metal space. But there we just have to play the commodity cycle. It doesn't matter whether it's a PSU or a private sector company. So that's broadly the gamut of PSUs that we have.
That's the view coming in on some of those PSUs in trade. Meantime, on the charts, let's also get in a view then as to what the outlook is, Rajesh, on some of these auto stocks in today's trading session. The expectation is that we could see a bit of a muted volumes growth for the month, largely on the back of the second wave, the rising input costs, etc. What's your outlook on the charts?
So, if we analyze the overall automobile sector, whole sector is in a corrective mode, and the be it two-wheeler, four-wheeler space, most of the stocks are in the downtrend. So we believe that some more time we can see some more pressure in the automobile stocks, and we might see another correction of 4 to 5% in the automobile stocks. But if you look at the longer term time frame, this would be the opportunity to buy the stocks if it corrects around 3 to 4% from the current level. So stock like Maruti, Escorts, and other stocks like Hero Motor, these all under the selling pressure, and whatever the pullbacks which we have witnessed in the last couple of trading sessions, also they have all the supply pressure was there at the higher level. So we believe that this kind of supply is going to continue for some more time, and we can expect another 3 to 4% correction in the automobile pack.
Let's also understand what to expect from Motan, since we're talking about auto as a sector, and what's the expectation when it comes to the sales for the month of April. Vivek joins in with an estimate.
Well, auto sales this time around, expect a whole host of disruptions, whole host of activity across the entire space has stopped, has come to a standstill in select parts, while some other parts are working, however, amidst a host of supply disruptions and other disruptions as well. Also remember, when you're talking about April 2021, the base month cannot really be used as April 2020, given the fact that last year, this time around, we actually had the impact of the lockdown, so activity had come to a complete standstill. Now within that, most of the automakers, remember, have decided to pause production significantly from 1st May on the back of the fact that the second wave impact has been quite strong from coronavirus. Also, remember, within the second wave impact, Nomura says that retails have been affected by 30 to 50% on a month-on-month basis. Two-wheelers are expected to be the worst hit, given the fact that this particular disruption has come in the midst of the marriage season. Now, when you're talking about Maruti, when you're comparing it against March 2021, they're expecting a sequential decline or a monthly decline of 4%. M&M Auto seeing a monthly decline of 18%. The farm or the tractor is expected to see a decline of close to 8%. While when you're talking about Escorts, again, 11% month-on-month decline is what analysts are penciling in. Tata Motors, both PV and CV are expected to see a decline of 12% and 31% respectively on a month-on-month basis. Eicher expected to see a decline of close to 30%, while Ashok Leyland expected to see a decline of over 36% on a month-on-month basis. Bajaj Auto, TVS, and as well as a whole host of other tractor as well as two-wheeler companies are expected to see a decline, given the fact that this particular month numbers have been quite weak due to lockdowns, especially localized lockdowns that have been imposed due to the spread of the second wave of the coronavirus.
Okay, Vivek, we'll leave it at that. In fact, on that note, I'm going to thank Rajesh as well as Mihir too for taking the time out and joining us on the show. In fact, I'm going to quickly take it across to Ruchi Bhatia, my colleague, get in some exclusive details. It seems that the Finance Ministry as well is assessing the impact of the second wave of the virus. Ruchi, what's under assessment and what's the Finance Ministry's take on this spike in virus that we're seeing?
Oh, absolutely. We're given to understand that Finance Ministry has already begun assessing the economic impact on Indian economy due to the second wave of coronavirus. Remember, over the last few weeks, we have seen the coronavirus cases spiking each and every day. And in fact, various states undertaking localized lockdowns, in fact, and that is likely to have an impact on the Indian economy as well. The hope was that things will get better. There will be recovery that we will see, and that is exactly how the budget was made. But looks like there will be some tweaks that are likely to happen in the next few days, given the fact that we're once again seeing the economic activity slumping on account of these lockdowns that various states are undertaking. We're given to understand that in the assessment so far, remember, Finance Minister Nirmala Sitharaman has been holding various meetings with top industry leaders, and besides that, they have tried to figure out what is the need of the hour. We're given to understand that early phase discussions are on in terms of reprioritizing expenditure plans, as well as other steps such as IBC suspension are among the measures that are being mulled so far. The focus, of course, will be on giving priority to sectors that need a boost over the next 3 months, which is priority sectors such as healthcare, such as vaccination, other infrastructure related sectors such as roads and highways, and housing will be the ones that will see the bulk of the money being transferred as well. Remember, Finance Ministry today has proceeded with additional 15,000 crore rupees to states for capital expenditure as well. Some of these restrictions, remember, were removed in the last few weeks, given the fact that we had seen the Indian economy getting better. But now that we are in the midst of the second wave, we're given to understand that some of the previous measures will be once again put in place. Among them, of course, is IBC suspension as well as reprioritization of the expenditure caps as well. This which means that the non-priority sectors will be put in abeyance in terms of spending. The focus will be on the sectors that will pump prime the Indian economy.
Thanks very much, Ruchi, for those details. Maithili Bhushanurma joins in on the phone line to assess this latest news bit. Maithili, thanks so much for joining in. With the Finance Ministry assessing the impact of the second wave, given that we're deep in the throes of it, the economic imbalances and impact is, of course, going to be very acute. What is your outlook on the Finance Ministry now looking at prioritizing expenditure with the IBC suspension as well as reprioritization of the expenditure caps?
Well, clearly the Finance Ministry and the Reserve Bank of India's assessment that India's growth assessment for this year would hold, despite the second wave, the early stages of the second wave. The governor had said that he saw no reason to revise downward the GDP growth estimate for this year. That clearly needs to be reassessed now, given the fact that the second wave has proved more ferocious and more long-term than was initially hoped for. So clearly the Finance Ministry does need to look at what the growth is going to be this year, but at the moment, anything that you say in that direction will have to be a guesstimate. The best thing the Finance Ministry could do is reprioritize all its expenditure, I would say, in favor of vaccination. In fact, the first and perhaps only goal of the Finance Ministry and of Government of India, state governments together, must be to try and ensure that every Indian who wants the vaccine is vaccinated, and you try and see that the maximum number of people are vaccinated, so that, at least we have herd immunity, and only then can we really talk of anything in the range of economic growth. Vaccination, vaccination, vaccination. That, I think, should be the only priority of Government of India and the state government at this moment, which also means not just getting the logistics in place, but also ensuring that the supply chain, the supply of vaccines to the state governments, the totally unnecessary brouhaha about the pricing, all that was needless diversion of attention to the governments from a very crucial area. So I think that perhaps comes first rather than any kind of infrastructure spending, etc. All that can wait. The first expense has to be in providing vaccination and, of course, essential healthcare for those who are sick.
All right, Maithili, thanks very much for giving us an assessment. And yes, as you said, vaccination is just the way forward now in order to ensure that we emerge out of this as soon as possible and as safely as possible. All right, on that note then, let's take a very quick break. Come right back as we continue our market talk when we return.